Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders, and for Elliott Wave Trading, our website is www.24elliottwaves.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Do not use this video as a trading signal. Very, very important. It is primarily for the TSTW traders. The title of this video is First Wave, a Mind Game. As I explained to you in the first video, there are three things that will influence our trading results or our stock portfolio or our trading portfolio. The first is the mind game, all right? The mind game. The second is the trading method, and the third is the money management rules. In this series of video, we are focusing on the mind game in trading using the Elliott wave. We are focusing on the price itself, which is the number one indicator, because Elliott wave principle is the purest technical analysis. The first Elliott wave is the wave that will break out of the consolidation zone. Is the initial, motive wave, all right? So the motive wave is formed of 5 waves: the first wave, second wave, third wave, fourth wave, and the fifth wave. The initial wave of the motive wave is the first wave. So when we see the first Elliott wave, we must analyze it, go into the mind of other traders to see what's going through their mind, all right? What is the market thinking? Well, how is the market environment? This is very important. Is the market environment, viable? Do we have an orderly market? Do we have a distorted market? Is the fundamental sound, okay? What is the market cycle? Talking about the trading triangle itself. So we'll use all this mind game. During the first Elliott wave, at the end of the first Elliott wave, the RSI will be overbought, the stochastic will be overbought, most oscillator will be overbought. Some trader will try to sell, but this is just the beginning of a new bullish trend if you are talking about an uptrend, because here I'm talking about an uptrend. The inverse is true in a downtrend. So a lot of things going through the mind of trader because there was a consolidation. Suddenly the price started running away. There are some group of market participants that knew that the price is likely to go up. Probably they were using what we call the Roots median line or the financial static way to determine whether the stock will break out or break down. And also checking the fundamental on Google Finance and Yahoo Finance. So we see the first Elliott wave. Talking about the mind game of the first Elliott wave, I want to focus on the extended first Elliott wave. During the extended first Elliott wave, the first Elliott wave is a complex wave during the extended Elliott wave because it's divided into 5 sub-waves. I have my drawing here. So from here, I'm going to put a spotlight there, so you follow me carefully. From here to here, this is the first wave, which has been divided into 5 sub-waves. First sub-wave, second sub-wave, third sub-wave, fourth sub-wave, and the fifth sub-wave. Now, if the first wave is extended, sometimes it creates confusion in the mind of traders. So suppose you're on the monthly charts, all right, and you have a first Elliott wave that has been extended. So on your monthly chart or on your weekly chart, you count 5 waves. You will think that that's the end of the motive wave. But we also know that, the Elliott wave principle is a fractal principle because a wave on one time frame can be a minor wave on another time frame. All right. So if we count 5 waves on the monthly chart, on the weekly chart, that 5 waves of those 5 sub waves can be equal to a single wave on another higher time frame. So you count your 5 waves, for instance, on the monthly chart. What is going through your mind? You're going to think that this is the end of the motive wave. To a certain degree, that's true. But because you did not know that this is the first Elliott wave of a bigger cycle, So in your mind, you will think that this is the end of the multi-wave, and you will expect ABC, bringing the price down in a zone of 50% and a 61.8% retracement of these 5 waves. So you will be expecting a correction. So as traders see the Fed if the first area wave is extended like this, so we see 1, 2, 3, 4, 5, there is a high chance that the third area wave, will be shorter than the first wave. Repeat. During a strong first area wave that has been extended, which has been divided into 5 waves, after the second area wave, if the third wave is underway, there is a high chance that the third wave may be shorter than the first wave. It's not always the case. It doesn't mean that definitely the third area wave will be shorter. But we need to watch it because already, if the first area wave has been extended for long, you need to be careful because you may count 5 subways during the first area wave, but if the price did not go up for too long, it's not significant. We want to see a first area wave that is truly extended, which means we count 5 waves and the price run a lot, maybe 400 pip move or 500 pip move or even more during the first area wave. It's not sufficient to count 5 waves and during the first area wave, and the price probably went up 200 pip only. It's not very extended. We want to see a huge progression of the price during the first area wave, and the first area wave divided into 5 waves. That's truly extended. In that case, there is a high chance that the third area wave will fail to exceed the first area wave. So this is a mind game, because what's going through the mind of traders are thinking that this is the end of the multi-wave. All right, so they start selling, and as the third area is underway, some traders will start selling, expecting a proper ABC correction, and then the price start going up. And why the price will fail to exceed the length of the first wave? Because a lot of traders are thinking that the multi-wave is completed, all right, because they have counted 5 waves, and they see this move down. The third area wave, in that case, what we have noticed very often will stop at 138% Fibonacci extension level of the first area wave, somewhere here. Let me say this again. If the first area wave is truly extended, you understand how I explain it to you. It's not sufficient to count 5 waves during the first area wave. You want to see a long progression of the price during the first wave, and the price be divided, and the move be divided into 5 subwaves. If that's the case, and we see the second area wave, we start buying, all right? If you are using a multiple time frame trading, you will know that 5 waves that you have count is just a minor wave of a higher degree. Are you following me? All right? So, in that case, as the price going up, a lot of traders thought that, okay, this is the end of the multi-wave. They are challenging the price because they want to sell. They're expecting a corrective wave. But because they didn't know that this is just the first area wave, which has been divided into 5 waves, the price continued to go up, all right? But because the price is going up, it's not going up freely. Because normally during the third area wave, the price should go up freely. We shouldn't expect the bear to try to mess up the third area wave after we exceeded the high of the first wave. As soon as we come to above the high, most of the smart bear will give up selling. So the price will run fast. That's why the third area wave is free move. Fast. You may see even a vertical move. But because trader has counted 5 waves during the first area wave, there are still bears around. There are still bears in the market that expect the price to give us, okay, a corrective wave, ABC, because they have counted 5 waves. They're expecting ABC move to the downside, or at least a flat correction. So as the price going up, okay, the third area wave, the bulls that are buying also are very careful. So as the price reaches the target zone of 138%, which is normally the target zone for the, the running flat correction and the expanded flat correction, they are likely to take profit. All right? This is the mind game of the first Elliott wave. So as soon as we see the first Elliott wave being divided in 5 waves, nothing should stop us to apply, as I explained to you in the previous video, to draw the length. Here, if we put it here, we set our target, we draw our line. But we also know that because the first Elliott wave has been extended, there's a high chance, okay, if suppose I put it here, let's just put it here, okay, just for the educational purposes. Let's see that our target here, as the third wave is underway, we see the first wave has been extended too long, all right, there's a high chance that the third Elliott wave may not achieve the length of the first wave. Sometimes you may see equality between the first wave and the third wave because the length of the first wave will be equal to the third wave. Alright, you understand? This is the mind game of the first Elliott wave. Now, what we are discussing here, this is about understanding what is taking place, what goes into the mind of market participants, why they are making decisions that they are making, why the third Elliott wave is likely, okay, to fail to exceed the length of the first Elliott wave, or maybe it can only achieve the length of the first Elliott wave, which is equality between the first wave and the third Elliott wave. But we cannot assume straight away that the third wave cannot be extended. So do not think that the third Elliott wave cannot exceed the first Elliott wave if the first Elliott wave is extended. All we are saying is that there is a high chance that in this scenario that the first Elliott wave is sufficiently, significantly extended that the third Elliott wave may not, okay, achieve the same length like the first Elliott wave. But sometimes some stocks are dynamically bullish, and you will see the first Elliott wave extended, and the second and the third Elliott wave also will be extended. We know that the first wave, the third wave, and the fifth wave are the only wave that can be extended. Do you know that? All right? First wave, third wave, fifth wave can be extended. So if the first wave is not extended, the third wave is likely to be extended. If both the first wave and the third wave are not extended, the fifth wave is likely to be extended. That's why sometimes we see the extension of the fifth wave. I invite you now to follow me in the next video when we're going to discuss, okay, the fifth wave mind game. I hope you have learned something from this video about the first wave mind game, and we put it into use to make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.